Hello everyone, I am Michael Ruger. I am the managing partner of Greenbush Financial Group. If you made the mistake of contributing too much to a Roth IRA in a given tax year, you now have to go through the process of removing those excess contributions from the account. And depending on when you discover the error, you could have different options available to you. And I'm going to go through those today. And some of those corrective actions, unfortunately, could involve having to pay some tax, paying early withdrawal penalties, potentially paying the 6% IRS excise tax on those over contributions. So I'm going to walk you through the process from start to finish. This error most commonly happens when individuals make contributions to their Roth IRA. Then at the end of the year when they're filing their taxes, they find out that you made too much to make a Roth IRA contribution, or you can't make a full Roth IRA contribution. And there's income thresholds where the phase out begins. So you start phasing out slowly those Roth contributions, then you completely phase out on the upper end of the range. For 2022, the phase out ranges for a single filer are between $129,000 and $144,000, and for a married filing joint, it's $204,000 to $214,000, but those limits change with each passing year. Here's where the timing of the mistake comes into play. If you're fortunate enough to find out that you over-contributed before you file your tax return for that year, normally the corrective action is you take the excess contribution back out of your Roth IRA. You receive that back tax and penalty free, but then you have to do an earnings calculation on that contribution from the time it entered the account to the time it left. And you also have to withdraw the earnings associated with that excess contribution. In the earnings piece, that's where you have to pay ordinary income tax on the earnings and potentially a 10% early withdrawal penalty if you're under the age of 59 and a half. But again, it's just that earnings piece that the taxes and penalties apply to. When you read about these excess contributions and the penalties associated with them, you're going to see a 6% excise penalty for excess contributions. That only applies if you miss pulling out those contributions prior to your tax filing deadline. Let's go over a real life example of what this looks like. So if it's 2022 and you make contributions to your Roth IRA at, let's say, $6,000, but now it's a spring of 23 and you're getting ready to file your taxes and you find out that I made too much and I actually can't contribute $6,000 to a Roth IRA, I can only contribute $2,000. So that means I have a $4,000 excess contribution still sitting on my Roth IRA that I have to remove. So if I haven't filed my taxes yet, I can go in, remove the $4,000 back out of my Roth IRA, no taxes or penalties, but I also have to do an earnings calculation on what did that $4,000 earn while it was in my Roth IRA, and let's say it's $400. So I got to draw out the $4,000 for the contribution, and I have to draw out the $400 in earnings it made. And that $400 is what's subject to the ordinary income tax. And since I'm under the age of 59 and a half, a 10% early withdrawal penalty. But again, that only applies to the $400 in earnings. The next scenario is you have an excess contribution. You ended up filing your taxes in March or April. You didn't catch it. And then you find out after the fact that this excess contribution existed. What happens? Well, technically, you have until October 15th, which is the extension deadline for your taxes, to amend your tax return, go back, basically say, yep, I made this excess contribution, and that way you avoid that 6% excise penalty. You got to do the earnings calculations, you got to pull the money back out, but it gives you that extra time that if you're able to amend before October 15th, you can still avoid that 6% penalty. The final scenario is you find out after that October 15 extension deadline that you made this over contribution or you didn't get the excess out by October 15th and amend your tax return. Now you are subject to that 6% excise penalty on the amount of the excess contribution, not just the earnings anymore, but the actual excess contribution. So if you over contribute by $4,000, it's a 6% penalty on that $4,000, and you still have to remove that excess contribution as soon as possible, because it's not a 6% one time, it's 6% for every single year that excess contribution remains in that Roth IRA without being removed. But here's the difference. So there's a 6% excise penalty on the over contribution amount, but you no longer have to remove the earnings from the account, which is different than before, right? Before you had to remove your contribution and the earnings, and you paid tax and penalties on the earnings. Once you're beyond, that October 15th extension deadline, now they just assess that penalty on the excess contribution amount, but you can actually keep the earnings in the Roth IRA and you do not have to do the earnings calculation. Here's an example. I'm sitting here in July 2022 and my accountant informs me that 5 years ago, I made an excess contribution to my Roth IRA for $5,000 and that money was never removed. It's 6% each year for those 5 years, which equals a 30% penalty on that $5,000 excess contribution, which equals a penalty of $1,500. And that 6% per year will continue until I physically take that extra $5,000 out of my account, but I do not have to go back and calculate the earnings on that $5,000 for the last 5 years, because again, they're just assessing the flat penalty instead of making you do the earnings calculation. Herein lies a tax strategy to potentially consider. Before I describe this, I will offer this blanket disclosure. You should consult with your tax professional before executing on this. But if you have a choice saying I can either remove the money before tax filing deadline plus extension, get the contribution back tax penalty free, and just pay taxes and penalty on the earnings, or I wait until after the tax filing deadline plus extension, withdraw the excess, and now I just pay the flat 6%, but nothing on the earnings, and the earnings gets to stay in. There could be a tax strategy or some math you have to do. If your Roth IRA has had a phenomenal investment performance over the last year, the taxes and penalties on the earnings could actually be more than the flat 6% excise penalty if you just waited and take it out later in the year. Let me show you how this works in an example. Now, let's say I make a contribution to my Roth IRA in January 2022 of $6,000. And then I discover in March of 2023 that I made too much to contribute to the Roth IRA, and I have to take all $6,000 back out of the account. But during that period of time, over that slightly more than 1 year period, my Roth IRA earned a 50% investment return, and I'm 35 years old. So I have two options. Option one is I can remove the excess contribution prior to filing my 2022 tax return, so I get the $6,000 back tax and penalty free. But then when I withdraw the $3,000 in earnings that made while it was in the IRA, I have to pay ordinary income tax and a 10% penalty on that $3,000 in earnings. And if I'm in, let's say, a 32% Fed bracket, a 6% state bracket, and then I have to pay the 10% penalty on top of that, that's a 48% tax penalty I have to pay on that $3,000, which equals $1,440 in total. However, if I just waited until November 2023, pulled out my $6,000 excess contribution and just decide to pay the 6% penalty on that amount, that equals $360. So $1,440 versus $360, because again, I don't have to pull the earnings out or pay penalty on the earnings if I elect to wait until after October 15th. This is the investment strategy. Besides just paying the lower fee to the IRS, there's also an additional benefit that $3,000 in earnings gets to stay in my Roth IRA. It gets to keep accumulating returns until I turn age 59 and a half, at which point I can withdraw it tax and penalty free, where if I took it out prior to the tax deadline, remember, they made me remove the earnings. Now, a quick kind of nerd note about this is if you have a Roth IRA, and the only thing that's in the Roth IRA are these excess earnings that came from, non-qualified or excess contribution to the account. So you had to pull out the contributions, and the only thing left in that Roth are these kind of earnings from that. That does not start the 5-year clock for purposes of the Roth IRA, being able to take out that money tax and penalty free after 59 and a half. Because remember, with Roth, you have to be 59 and a half and it has to have been in the IRA for 5 years. If the only thing in that IRA are no legitimate contributions, but just the earnings generated by excess contributions you had to take out, it doesn't start that 5-year clock. So just be careful. Since I'm filming this in 2022 and most of the market indices are lower, I will also get the question, well, what if the Roth IRA lost money from the time I made the excess contribution to the time I withdrew the earnings out prior to my tax filing deadline? The question is, do I still have to draw out the excess contribution amount, or does it get reduced by my losses, my investment losses realized in the account? And the good news is they're reduced by the investment losses in the account. So let's say you made an excess contribution of $3,000, you discover it, you want to take it out before your tax filing deadline plus extension, but the account is lost, let's say 20% in investment value during that period of time. Instead of having to take out the $3,000, reduce that by the 20% loss, you only have to take $2,400 out to really satisfy that excess contribution removal. There are other options for correcting these excess contributions besides just taking the cash back out of the account. So that's what we talk about up until now. Discover the error, take the cash out, pay whatever taxes and penalties are due. But there is an option called a recharacterization. If you discover the error before your tax filing deadline, you can actually move the excess and earnings from your Roth IRA over your traditional IRA as long as you're eligible to contribute to a traditional IRA for the year, and you have to make sure it's done before that tax filing deadline in order to avoid that 6% excise penalty. The next option is just to leave the excess contribution in the Roth IRA and have it count towards the next year's Roth IRA contribution, assuming you're eligible to make a Roth IRA contribution the following year. So if I'm in 2022, I make a $6,000 contribution to my Roth, I found out I over-contributed by $1,000. If next year in 2023, I'm eligible to, let's say, make a $6,000 contribution that year, I can just reduce that $6,000 to $5,000. That'll eat up that excess $1,000. Now, it's important to know that because I never took the excess out of the account, even though I applied it to the next year's limit, I would still have to pay that 6% excise penalty because the excess contribution never actually left. I just left it in there. But some people will say, hey, to go through the headache of having to pull the money out and do the earnings and everything, I'm just going to leave that $1,000 in there, pay the 6% excise penalty for 1 year, which is $60, and to just go on with my way. But that's just another option for correcting it possibly. If you made multiple contributions to the Roth IRA during the year, the question then becomes, well, which one do I remove? Do I get to choose which contributions come out? And the IRS says no. They go by a LIFO rule, which is last in, first out. So if you were making monthly contributions throughout the year and you made excess contributions, you have to start with the most recent contributions that you made for that current tax year and start backing them out from there. They don't let you kind of cherry pick what contributions are going to count towards that excess contribution. For individuals that have multiple IRAs, if you have multiple Roth IRAs out there and you discover you have an excess contribution, the excess has to be taken from the Roth IRA that the excess contribution was made to. You can't say, hey, I've got this Roth IRA, made the contribution, but I'll just take the excess out of this Roth IRA over here. It has to come out of the Roth IRA that excess contribution originated in. And also, if you have, let's say, a traditional IRA and Roth IRA, and you discover at the end of the year, I didn't aggregate the contributions and I contributed too much between the two of them, the IRS automatically assumes that the excess contribution took place in the Roth IRA. You can't choose, well, I'll remove it from my traditional, not the Roth. You have to remove the excess contribution from your Roth IRA. I hope this was helpful. If you have any questions, please feel free to reach out to me at moneysmartboard.com. Thank you.